Hello, good morning, and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets, for Tuesday, the 4th of February. Please, when you're listening to these videos and watching it, don't forget that they are for informational purposes only, and make sure that you've read the written disclaimer at the bottom of the morning report page on our website. The main take from overnight is certainly that the flight to safety continues quite significantly in global markets. There's been some big breakdowns on some charts that we've seen in the last day that certainly suggests that this bullish outlook that the global financial markets have been in for so long, certainly in the past few months anyway. That is now under significant pressure. The latest move has come on the back of this poor US ISM data, the manufacturing PMI that came out at 3 o'clock yesterday afternoon GMT, and that was significantly below estimates, and that saw some big breakdowns on some fairly important charts. Certainly, there's been, as I said, a flight to safety overnight. That the general safe haven assets being US Treasuries, the yen and gold all had strong moves in their favour, and certainly if you look at the Treasuries, they're coming back towards this key level. You've certainly this key breakout level at 238.50 and also 247.50 as well. That sort of area. So there's a big band of support that that could come back towards now, and that's still up around the 260 mark. So that could still have some way to go to the downside, and that might suggest that there's further legs in this run at the moment, but. There's actually in the course of today, there's not a great deal of data going on that's going to be all too market moving, and perhaps today is going to be the quieter day of the week. But the chart of the day that I'm looking at is the S&P 500 now. As I said earlier, big levels have been broken down on some of these charts, and certainly the S&P 500 had a big break of that key uptrend that had been in place for so long since December. That uptrend has now been decisively broken. That came on a move below that key support around 1768, 1770 that basically had a bit of a test on several occasions on the intraday chart. But that broke down yesterday and broke down very quickly as well, and that has taken us well below the key December low of that was 176.7, and that is now gone below the November low as well of 1746. So that's a big move. Daily technicals, it's not enormously overstretched, but beginning to become oversold, you'd say, on the RSI back toward 31. That's getting stretched historically, and also the stochastics as well. That's also still stretched. So maybe you'll get an intraday bounce, but there is significant overhead supply from this big breakdown here. All these people that bought in back around 1770. From also within that consolidation band, all these dip buyers who bought in at 1770, they will be waiting now to potentially sell out of a rally that may ensue. So just watch out for that if you do get a bit of a technical rally. As I said, RSI on the intraday chart is now looking a little bit stretched, so you could see a bit of a bounce, but these momentum indicators are fairly bearish now, and the outlook for the S&P is not all that great that we're looking for anyway. So just be careful of any being sucked into any dip buying on that, because there is this significant overhead supply around 1770. Thank you very much for listening today, and I hope you get a chance to look at our other charts on the website. I wish you good luck with your trading and S&P. These markets continue to be fairly volatile. The S&P VIX index also is above 70, so that's a big key key move as well that suggests volatility remains elevated, and in these sort of situations, stocks generally tend to get hit. So just be careful on that. And I will speak to you later. Thank you very much.